What's going on, everybody? Welcome back. This is day 3 of the SPY 30-minute. Can we call it a challenge? I guess so. We're just seeing how this strategy plays out for the rest of the month of September. A few days back, I gave you this SPY 30-minute strategy, and I noticed it last week when I was watching SPY on how well the 30-minute chart was working for plays when we had the hourly and the daily in the same direction. And we'll go through that as we go through this day on September 15th, the third day of this strategy. So let's jump into it. We'll go through it. The first day, we would have had a really good winner. The second day, it was up in the air. Depends how you manage your risk. You could have done really well, or you could have had a bad day. So let's see how the third day plays out on this SPY strategy and how you guys would have fared. Okay, so this is the final bar of the previous day. So let's move into the next bar of today. So the first bar of today, guys, opens up right here. We trend down, and then we come up. Okay, and we break through that trigger price. This blue line that I've got here, guys, somebody asked me on one of the channels what indicator that is. That's not an indicator. That's just a, what do we call it here? It's a horizontal ray line on TradingView. And it's just a line that I put in and I colored it blue for my visual to know where that flip is for the day on the red to the green, or the green to the red, vice versa. So I've marked out the targets here at the top of the preceding wicks, okay? Those are our targets. We triggered through this thing at 394.97, and a lot of people ask me, where do you take your strike prices? So I take my strike price closest to this trigger. So this trigger dollar value is 394.97. I'm taking 395 or 396. That's my strike price. And I take closest expiry, so that would be Friday. It moves quick, so some people prefer to take a little bit further out. Some people take a week out, so you could go to the following Friday. I think it's September, what is that? 16, 17, 18, 19, 20, 22, 23. September 23rd, or Wednesday, or the Monday of next week. You could have taken any of those. It really depends on how you guys want to manage your risk, and that's what this stuff comes down to, because, guys, there is no trade, there is no strategy that does not have risk. Okay, they all have risk. There isn't, the reason there's risk is because we're trading probabilities, because we don't know what the next candlestick's going to do. We can have high probability of what it's supposed to do or what it should do, but it doesn't mean it's going to do that. So there is risk in every single trade. So if we look at this, this is the opening bar. We trigger, okay, and we hit first target. So there's two things we can do here. We can put our stop loss at this trigger, the original trigger, and we know we're leaving this trade with no profit and just the fees that it costs us to buy into that contract. The second spot you can do it is at this target right here, and you can have your stop loss there. For me, there's not a lot of room here, so I'm probably going to leave it here at that trigger, okay? So if we go to the next trade, or the next, candlestick, we open up and we come through target 1 and not quite target 2. So now, again, I wouldn't leave it at that trigger any longer. I would put it to the first target or the second target. Okay, either one of those would have garnered you profit before we reversed all the way down to here. Okay, so you had opportunities here or here to take profit. Now we move on to the next trade. So there's a profitable trade. Profitable trade number 1. You should have left with profit or at least at a break even. Okay, so trade 1 out of the way. Trade 2. We are looking for the break of this candle on the next bar. Okay, we're already 2 down. We're already red on the hourly and we're red on the daily at this point. Okay, I know we're red on the daily because we've crossed that blue line. That puts me to the red on the day. Okay, so the next step is where our stop loss will go. So we go on to the next candle. Okay, so there we have it. We break through, the trigger, and we've hit target 1. Now, if this is me, again, you can put your stop loss at this point. You can put your stop loss at this point. You can put your stop loss at this target here. Or, I guess you can't put your stop loss there, but you could take profit there. So, anywhere that you took profit here would have been a really, really good trade on SPY again. So, if it's me, my stop loss goes there. Let's see what the next candle does. Okay, so we opened here on this candle, and we trended down through 2 more targets. So, what are we doing now? Whoops, let me move that back. We move our stop loss. So our stop loss, again, as we trend through here, either goes to here or to here. So either one of those, you would have got stopped out on either one of these targets, okay, because the trade came back through back to the upside. And that's okay because, again, we got out of this trade with profit. So now you're at least 1-1 on the day, if not 2-0. So let's see what the next candle does. So we opened up here, we trended up, and then we came back through with this outside bar. Not a trade that I would take. So if you're still brave enough and you're trading at 2.5 hours into this thing, and you're thinking, well, I've got one, I'm going to go for another one. The next thing you would look for is a break to the bottom side of this candle right here. So let's see what we get. And we get that, okay? So we come down, we hit the target exactly. So I move the trigger down, and we hit targets, and we come back through. Now, this one gets a little bit more tricky because this probably was a really, really fast move. It didn't take long. So you could have taken profits at your target or your trigger, or you can say, you know what? I'm going to wait. I'm going to wait for this to break through the top of that candle. Now, that's a lot of risk because there's a lot of dollar value coming off of that, a lot of premium coming off of that option contract. So if you did that, it came back up through, you're stopped out of the trade. Okay? So let's go see where the next candles lead us. So let's talk about this because yes, we triggered, but when we triggered, guys, our hourly would have been green, but our daily would have been red because we were below this blue line, and there was no actionable signal in this area, okay? I know somebody in the Discord took this trade as a reversal and did really, really well, but we're talking about this strategy, and this is not something that I would have triggered off of here because the day was red still. So I need that hourly and that daily to be red. And just because we crossed through that blue line doesn't mean we jump into that trade. We need an actionable signal here. So if we go to the next candle, there's our inside bar again, okay? So if this would have trended up above, that's a play to the upside because the hourly and the daily would have been green. So now we're back below the blue line. We are in put territory, red territory. Hourly and the daily are red. So what are we looking at here? And I know how this trade worked out because I took part of it here. Okay, so there's your inside bar. You've got a 2-1-2 reversal is what you're looking for. So a 1-2 reversal. And there it is. Okay, we open and we come bang through this and right down to here. So now again, there's a couple things we can do. You can put your stop loss here. You can put your stop loss at this trigger, or you can put your stop loss at this target. This is a tough one. Or you could have taken profit anywhere in here because this would have been really good profit. And actually, I'm going to move this because this target is now there. Okay, and this target, let's move these around a bit. Give me a second. Let's just do this. We'll put them in like that, and we'll delete this one. We'll delete this one, and we'll put in our own right there. Okay, so first target achieved, and then we came back up through it. Okay, So again, if you had your stop loss here, you're out of that trade. Okay, if you had your stop loss here, you're still in that trade. I didn't take this trade at this point. I'll show you where. So there's the next one. If you came through here and you got stopped out, you say, oh well. Okay, so the next thing you guys can do, if you got stopped out there, or maybe you just held it here, okay, maybe you had your stop loss up there, that's fine, you're still in the trade. The other thing you guys can do to get back into this trade, right there, okay? So this right here, guys, is where I got into this trade. And we triggered here. And now you move your stop loss, okay? You can have it up there. I wouldn't put it up there. You can put it at this 50% marker, or you can put it at this original, or the second trigger, I guess. So let's go in to see what happens on the next candle. And there it is. Boom. Okay, so you, realistically, guys, there should have been no way you lost today on this strategy, okay? You should either be even minus your fees, or you should be green. I know for a fact that this trade, so now let's move you can move your stop loss down again. So here, oh sorry, that's the trigger. There's a stop loss. So you can move your stop loss again to this trigger point, which I wouldn't do, to here, or to here, okay? You're already 3 targets in. This, guys, is a fantastic trade. And if you've only got, one contract here, I would take my profit there. Even if you had more than one contract here, guys, this is a great spot. This is a really, really great trade. So this was a really, really good run. And you would have made a ton of money on it. So if we just go to the next candle to see where the next candle ends up being, and there you have it. So we opened, we came back down a little bit, and then right back up through. You're out of this trade with profit and plenty of it. So 1 trade, guys. 2 trades right up there. Where's the other one? 3, is this it here? 3, yeah, 3, but this one would have been difficult because we hit targets so fast. So 2 and 1, let's call it. 3 and 1. And 4 and 1, is that where we're at? 5 possible trades on SPY today. You should have won 4 of them. Even if you won 3, you got out of the day way ahead. Even if you would have traded just the first 2. If you would have traded from in the first, what do we got here? An hour and a half. You had 2 winning trades in an hour and a half, and you were done for the day using this 30-minute SPY strategy. Guys, I hope you enjoyed this. Make sure you're following me on Twitter at Mr. Clark Griswold. There's links in the description below for TradingView free 30-day subscriptions. What else do I got? The Discord room, the indicator, which I did not talk about, but everything that I offer you guys free or fee-based is in the Discord room. And make sure you wait till the end. Check out the videos at the end. There are more videos just like this one to help you guys learn how to trade more profitably and more consistently. Good luck trading on Lotto Friday, guys, and we will see you all on the next one. Bye-bye.